Well, hello, Facebook world, and all of those that we're reaching today and the days to come in our databases. So here we are, we're back again. It's Darren Langell, I'm the CEO of Redline Real Estate Group, and we do a market update month in, month out. We take the data that's been coming from the real estate board and we dig a little deeper, and we want to get you the most relevant pieces of information so that you can, again, make the proper financial decisions that you need to make, have the peace of mind that you're looking for, and at least have some awareness about what's going on. Even if you're not actively in the state of buying or selling real estate, this information is for all people involved who own or in attempting to own here in the Calgary area. So what I start off with is what I call the State of the Union. And that's where I'm going to start today. So digging into what's happened over the last month, there wasn't a whole lot of new things to discuss, aside from one thing that I'm going to hit on. But then there's also some really interesting things that I guarantee you that you don't know about what's going on with the Calgary market as a whole and the economic engine that we are. There's some things here that I want to hit on that that's going to make you very happy about what's going on. So we continue to see that normal things that should happen at this time of the year happening right now. And what I mean by that is we see a few things. Slight month over month price declines, just a little bit. We're seeing a little bit of a decline month after month, and that happens every year on the year as we trade towards Christmas and into January. The other thing is the pace of sales per month drops from its previous month. That's happening as well. We'd expect that. So nothing new. The other thing, inventory levels continue to ease. So that means more properties are coming off the market. There's less homes to look for. And if you're a seller, less homes to compete with. So nothing new or unexpected here at all. Hey, Jackie, thanks for tuning in. So the one thing that has happened is we've had our first month since August where this month's sales surpassed what we achieved at this time last year. There's been a couple months in a row here where we've seen a declining pattern where last year was better than this year, but that's now changed. We've seen a bit of a spike. Now, hold on here, things aren't changing. We're not seeing a spike in what would be sales, but this was predicted because of these pending rule changes around the mortgages, that we expected people were going to be jumping into the market to get ahead of the potential decrease in their buying power. So that has happened, just like it happened last year when we had some pending rule changes as well. So the one thing, though, that was surprising is we've seen the biggest jump in purchasing in the price ranges that were down in the 300,000 to 450 range. See, we were expecting, because the mortgage rule changes are only really affecting those people with 20% down or more, that it was going to be a little bit of the higher price bracket, the people that typically have a little bit more equity as they're trading up to be affected. Not so much in these home prices where it's average sale price or below. So that's interesting, because typically that price bracket of buyer doesn't have as much equity. They don't have 20% or more. So what caused this? Well, it's a very good question. I don't have the answer, but I'm going to speculate a little bit. There was a lot of confusion around the mortgage rule changes and what that's going to do to some people. So I think some people jumped into the market in advance of the changes, even though it wasn't going to affect them. And then along with that, there is some increased confidence going on in our market and the overall job stability as a whole. So personally, I always see a push in my own personal business, and we see that at the brokerage level, where people love to get into homes before the Christmas season. There's just something incredible about setting up that Christmas tree for the first time in that new home that you just acquired. So again, and that's something that I think is happening right now. Now, I mentioned above that there's an increased confidence in consumers. And I'd like to back this up with a few stats that are really important for us as Calgarians and the greater Calgary, all the feeder communities that really feed off of our economic engine, and to talk about a few things. So For a few years, we haven't felt like things were doing very well in our province, and specifically here in Calgary, because of oil prices, political changes, pipelines, all of this stuff hasn't been a lot of a good news story. But what I'm here to tell you is some incredible things that you are probably not aware of. So first one is GDP growth, gross domestic product, overall output that our economy is putting out. For 2015 and 2016, we actually saw a decline, -3 and -3.2 in comparison to years before. But surprisingly, 2017 has been a big switch. We actually had a 4.6% growth rather than decline. So if we went from 2016 to now, that's actually a 7.8% swing in GDP growth, which is really a huge switch. So that is great news for us as Calgarians and greater Calgarians, that our economy is doing a lot better than a lot of us actually expect, and probably a lot of us feel. The other thing I wanted to hit on is a few more stats. Full-time employment growth. So these stats I'm going to talk to you about are how Calgary stacks up against the country, all the other major cities. So full-time employment growth, we're currently number 1 in the country with 4.2% full-time employment growth. So huge good thing for us when there's job stability. The other thing I wanted to hit on, labor participation, which means how much of our labor force is working, the ones that want to be working. We, again, number 1. The other thing, 2016 population growth. We are tied at number 2 in the country. So we're not number 1, but we're pretty darn close. And then the last one is GDP per employee. Again, we sit in Calgary at number 1 of all the major centers with $140,000 of GDP per employee. So despite the ups and downs of the oil that we've had, the likelihood that we will see these heydays of yonder is really unlikely. But all of this tells us that Calgary is strong. Calgary has a lot going for it, and we're doing better than most think and most of the papers talk about day in and day out. So if you're thinking and you're on the fence about buying or selling or trading up, we are a very stable place to be. We're a very stable place to have employment as well as home ownership. So dig in and don't get scared about, the dog days being over. Today, I'm not going to dive into some deep stats. If you ever want to be right in the queue about what's going on in your specific community, please reach out to myself or one of any of the other Redline agents, because we'll be able to dive really deeply for you. But I'm going to hit on a few things for sellers and for buyers. Beyond this highlight about the Calgary economic engine and how well it's doing, I'm going to hit on sellers and buyers. So first, for sellers, this is what you should know at this time of year. If you're in the 600,000 to 1.25 million range, we've seen still throughout the entire year, 11 of the 12 months so far, we've seen the biggest increase in sales year over year. And when I say biggest, I mean nearly 25% to 35% more sales happening in those price brackets than in those price brackets a year ago. So huge confidence. So if you are a seller and you're in those ranges, feel good about being able to make that transition a reality. When we get a little more specific, detached homes, sellers, they're still faring the best. Shortest days on market, citywide, we only have about 3.15 months of supply. So that's really quite low. Attached homes. Attached homes are semi-detached, like an infill, or row homes, where it's a row homes like a townhouse complex. Of the two, the semi-detached products are doing the best in terms of appreciation year over year, but that row house product is doing quite well as well. Now, I wanted to talk to condo owners specifically. The news for us and for you hasn't been good for a long time. I've been, unfortunately, talking about the declining price, the raise of inventory, and just not a lot of good confidence in your ability to make things happen. But I wanted to hit on the news hasn't changed much. It's still much of the same. But I do see a little hope. The engineer in me watches not only the monthly activity, but we watch the trend lines, and we can predict things with these trend lines. And for those people that just watch on the monthly basis or just dive in very surface level with these stats, will most times miss this deeper analysis. So what I wanted to tell you is what I'm starting to see is that the pace of sales continues to climb. And we're seeing an ease, a general ease of inventory ramp up. So you're not going to hear about this. It won't be spoken about in the Krebs stats, and it won't be spoken about in the papers yet. But since the summer months, we've seen a flatlining overall effect of that inventory. We are no longer seeing months of inventory higher in 2017 for the condo market than in 2016. And we are seeing more sales happening in this year versus last. So when we look at that, the month of inventory graph for apartment condos is actually one of the flattest graphs that we're seeing, which is a really good sign. And it might be the tell that maybe, just maybe, we're going to get to that shift that we need that will trend us back towards balance. The question is, when will this occur? Well, that I can't tell you. But their indicators are positive that that might be happening. So again, I'd love to chat more about that, but please let me know your thoughts. Now, before I let you guys go, I'm going to talk about the buyers. Well, first thing, you've got 24 more days, guys. If you're affected at all by the mortgage rule changes, you got 24 more days to get into a property and get a live deal in the queue. So if your stress test of this new mortgage rule change is going to affect your buying power, jump in there. There's still great property on the market, lots of inventory for you to choose from, and get out there and see if you can get into a contract before this affects you. Other than that, guys, this continues to be a time where the best negotiations tend to happen. Sellers are typically more open and motivated at this time of year to make a deal happen. This is for a few reasons. There's just less sales that occur right now at this time of the year, so showings are less frequent, and thus offers really are welcomed from the sellers community. And the second part to that is the ability to sell now allows for the excitement of new changes in 2018, both for the buyers who could buy and purchase something now, and for the sellers to get a deal on paper so that they can plan for the future that's coming in 2018. So that's what I would want you to know in terms of the buyer side. I'm going to just, while I've got you here, hit on a couple things. You know, when I look at the city, I look at which areas and districts are the hottest. And I rank hottest by a couple things. The percentage of listings that get sold based on how many have been put into the market on a given month. Right, so if 10 houses go to market and only 5 sell in that community, it's about a 50% sell through. Now, there's a couple outliers here that I wanted to point out. The detached market did incredibly well on the east side of the city this month. 92% of all things that got listed sold. So if you're in the east side and you're a detached homeowner, good for you. You'll be able to sell. It was proven. It also did fairly well in the apartment segment on the east. Now, when it comes to semi-attached properties, again, infills, what we saw in the south side of the city, the South District, was 123% of the things that sold, that went on the market sold. So again, it's flying. In the west, again, it did also better than 100%. So a lot of good things happening. And again, it's because of that, a little bit of extra momentum that's happened because of these mortgage rule changes. Now, if you're wondering where in the city we again had the most appreciation, the detached market in the west side continues to outperform all the others. The city core, the downtown, the center, it does quite well as well year over year. It's about 3% appreciation. And then when it comes down to the semi and the row homes, they have both been really well performing year over year. We're looking at, in the city core, nearly 6% appreciation year over year for a semi-detached property. And for row homes, again, that townhouse product, that inner city product, again, 5% year over year. The cool thing about this is 50% were above zero appreciation and 50% sat below. But other than that, guys, there's so much we could talk about this market. Again, for sellers and buyers, please reference back to my topics there. And if you're uneasy at all about the Calgary economic engine, listen to the beginning part of my talk, because it's very important for you to know how well we're doing in Calgary and how overall stable we are. So again, thanks again for tuning in. If you've got more questions, please comment. And again, send us some questions, because we can either set you up with one of our agents as a specialist in one of your areas or the surrounding communities of Calgary, or we can answer them directly for you. So thanks so much, guys. Have a safe rest of the week, and we'll see you again in the new year.